Okay, so the monthly webinar is dedicated to bringing you important topics for small business owners. And this month, I'm excited to have Lowy from Kavana, which is we'll talk about his business himself, but it's an important business service, especially for people in our community where business communications is a challenge sometimes, especially, being brought up in our bubble, so to say, of our community. We need to go out and present our business outside of the community. For many people, that's challenging. And in general, today's topic is how do you present your business to an investor? A lot of us here either are starting a business or they're growing a business, and at a certain point in time, you need to take on an investor in order to be able to grow your business. And how do you go about doing that? What are the important things to have in mind, and how do you present yourself in order to, sometimes it's the presentation that helps you win over the investor. And Joel has many years of experience with this, and we're honored to have him here today to share with us his wisdom and his tips for this. Just as a heads up, the presentation will run for approximately 40 minutes. And then there will be a Q&A session at the end. So we're going to reserve most questions for the end. If you have a question along the way, type it in the chat. There's a chat feature in Zoom on the bottom. Just type your question. I'll be monitoring the chat. And if it's a critical question that needs to be brought up during the presentation, please, I'll bring it up. So put it into the chat, and I'll be monitoring the chat. Otherwise, again, if you have questions, write them down. And at the end, we're going to reserve a Q&A session. So without further ado, I introduce Joel Lowy and his beautiful presentation. Joel, thank you for joining us.
Thank you, Rabbi Wordy. So thank you, everybody that joins us today. And our topic is how to present a business to investors. So a little bit about myself. We founded Kavana Business Presentations almost 2 years ago. Before that, I studied accounting and business, and I became a corporate analyst and researcher, and started doing business plans for friends, and then founded Kavana Business Presentations, and we do pitch decks and business plans and things like that. So back to our topic, how to present a business to investors. And so specifically what we'll be discussing, we'll be touching on 4 areas. One is the product versus the business. We'll talk about business models and numbers. We'll talk about a couple of important pitch deck items. And then we'll talk about how much to raise, and which is called ask and use of funds. So I'd like to begin with discussing the product versus the business, and how a pitch deck is about the business, not about the product. And there was a great story a couple of months ago from Jeffrey Fielman, who is an investment banker who specializes in startups. It was in AMI magazine, and he spoke about his activities with startups. And he mentioned that if somebody were to raise money for AMI magazine to expand AMI magazine, so a lot of people would think that you would talk about the features of the magazine. You'll talk about Ben Shapiro, or the recipes, or the different articles, or the quality of the paper, or the staples, or the photography. And that's nice for the consumer, but what an investor would look for would be the ad revenue. How much sales do you have? How does the distribution look in various regions and neighborhoods, and how are you going to expand that? So you don't talk about the paper or the staple, you talk about the business, right? So we're going to look at this image a couple of times during this webinar. This is a business model canvas popularized by Alex Osterwalder. And we'll go into this more in detail later, but I just want to give you a quick look at it. A business, the middle of a business is the value proposition. That's the product of the business. And the business lives in an environment which has its customers on one side, and it has its activities and resources and partners on the other side, and those give you costs and revenues. And we'll explain all that later, okay? But just have this in mind. So you talk about the business you're creating around your product or service, okay? So let's think about a car. So imagine that you come out with a new concept for a new car. You're going to go out to investors to raise a couple $1 million to come out with a new car. And if you're passionate about cars, you may think about the performance or the comfort or the safety features, things like that. And that's important to communicate to consumers. But this product lives in a business, and the business has to be taken care of. So the investor would want to know about your manufacturing, your parts, your rubber, your steel, with all the various things that you're going to get from all over the world. They will want to talk about revenue streams. Do you sell the car once and then that's the one time you get money, or do you have service or subscriptions that you have for certain features? They want to talk about different markets, the markets for different car types, car sizes, the Canada market, the US market, the Asian market. So they would want to know about that. And how you make your money, right? So you have dealerships, you have commissions. So this is the good example of a car where you have the product and you have the business that supports the product. So as we just said, customers care about your product, investors want to be part of your business. So yeah, this is this nice image. Don't talk to your investors about the car. Talk to them about the business you're creating around it. Now, if you are passionate about cars, that there is room for that, to communicate that to your investors. Or if you have a healthcare product, or you're raising money for a bakery, or even AMI magazine, there is room to talk about the product and the features to your investors, but the framework needs to be about the business. So with that said, we're going to be able to talk a little bit about the facts and figures of the business. Let's talk about the numbers. Let's talk about the business model, right? So back to this. So you have the value proposition in the middle. Value proposition is the thing. It's the car. It's the magazine. It's the bread you're baking. It's your pizza. Then you have your customers. So customers is the yellow. The customers, the channels, the customer segments. We'll talk about that in a minute. And you have activities, resources, partners, costs, and revenues. Let's go into them a little bit. The value proposition is your idea, your product, your service. It's the thing that consumers see. Okay. So who is your customer? So you have customer segments. Each product is made for someone else. QuickBooks is made for businesses. Pizza is for people that walk in from the store. Cars is for people who buy cars. Different software for different people, different products for different people. You have different relationships. You have different ways of reaching your customers, interacting with your customer. Every business will be different. And then you have your channels as how you do the business and how you transact and how they pay you, right? So that's the customer side of the business. Then you have partners, resources, and activities. That's very important. So if you sell products online, so your common carriers, your UPS, your FedEx are your partners, your PPC person is your partner, or the PPC environment, right? So because you exist in that environment. If you are in healthcare, your partner would be considered the insurance companies, the governments, anybody who regulates you, anybody who controls you, that's a partner. Or if you have key vendors, if you sell printers, Hewlett Packard will be a partner, right? So these are your key partners. Resources, the resources that you need to run your business. Those are your people, human resources, you have equipment, you have software. So these are things that you're going to need in your business or that you have in the business to let you deliver your value proposition. Then what is the activity that the business does, right? We produce business plans. Somebody else makes pizza. Somebody ships boxes. Somebody codes or does something else. And every business has activities. So now we see it a little bit better. You have the value proposition supported by the customer segments, customer relationships, customer channels, how you deliver to your customer, how you get paid. Your activities, what you do in your business, your resources is how you do it, and the key partners is who you do it with and who you depend on to deliver. So now that brings us to costs and revenues. So every business will have costs, which are driven by the activities and the resources, right? Your people cost money, your software costs money, your equipment costs money, and then the customers bring you revenue. So this is something that's important. A lot of times business owners are better at thinking ahead about costs. They know their activities, what the activities will cost, the resources, they will hire people, etc. But then think about all your revenue streams. And this is something we find a lot when people that we engage with business plans and pitch decks, that they mention something in passing, but there's another revenue stream, another possibility of making money from the business. But really spend time on this. You have your main revenue stream, you have your secondary, you have tertiary, and you may have many revenue streams or revenue streams in the future. So for example, the example of a bakery. So you make rolls, right? So you have people, or bagels, right? So you have people walking in. You may have multiple locations. So that's multiples of one revenue stream. You may get institutional orders. You may sell to schools, to nursing homes, to hospitals. You may have wholesale to stores, right? Frozen. You may sell additional items. If you're popular, you may have a label to create dips and herring and whatever from your labels. That's another revenue stream. If you have a beautiful location and you can eat lunch over there, maybe you have tours, maybe you can have catering, maybe you have online, and a lot of bakeries have all of the above, right? So you need to really develop all your revenue streams. So not only your costs, but also develop all your revenue streams. And obviously all of these bring activities, all of these need resources, and you reach different customers and customer segments. So it all works together. Which allows you, so once you think about this, this allows you to develop your financial model, but better yet, your operational and financial model. So now you know what you're selling, to whom, your activities, you know your costs, you know your activities, you know your resources. Now you can develop an operational financial model because you know the unit economics of your business. And this brings us to an important word. We'll just touch about that in a minute. It's called projections and assumptions. So when you're going to create this model, you don't know anything until you start the business, but you can have projections and assumptions. That means that you think how many people might come into your store. You think how many people might pick up your item from the shelves. You think how many locations you may sign up for your software. You think how many cars you may sell, how many magazines you may sell. And you have projections and assumptions. And those are all part of business models in business plans and investor decks. Projections and assumptions, that's an important concept. So for example, over here, we have a 3-year sales forecast and for a mental health facility. So they had, they're thinking how many patients will visit them and for 5 different services that they have. And this is for all facilities together. They had a number of facilities and they had a 50% monthly growth because they project that they will have 50% growth month over month. And then they have their costs, and the costs are not exact, but this is what they think that this is what the projected costs will be. So this is a table, this is operational model for a mental health facility with projections and assumptions based on their activities and based on their customers. Here's another example, another 2 examples actually. The first one is for a retail software. So they will have 400 locations that signed up for them at the end of year 2, because they'll sign up 110 locations in year 1, 290 in year 2. They have a revenue per store that they think they'll get. They think they have an assumption about the average order size. They have an assumption of number of customers per store. So that's something which they understand with their customers and their activities. And here's another way of looking at projections and assumptions, which is HR. So you think that you will need 1 CEO, 1 CFO. You'll need maybe 2 sales and marketing people. By the way, that's a great salary for sales and marketing. And so this is another way of thinking about your human resources, which brings you your costs. And this is a way of looking at your revenues and costs once you know your business model. And if you struggle with this, once you figure out your business model and you know your activities and costs and your projections and your assumptions, you can ask AI to present a table. I'll show you a fun example in a minute. So you can ask AI, I will have X of this times this of that, and I think that will grow at whatever growth rate we have. And AI can present a table. I'll show you in a minute. And you can ask AI to help you come up with expenses and revenue streams. So you can tell AI GPT that you will have a pizza store with a number of locations. give me 10 ideas for various revenue streams, or give me ideas for sales and marketing, and things like that. So I asked AI GPT just a very simple question, one prompt, if you know what that is. I asked AI GPT to present a table for revenue streams for a YouTube channel with 50 million subscribers. And I got this in one prompt. So it's important that you say as a table. And it just said how much AI GPT thinks that such a YouTube channel makes. And you can use that for any kind of business. Other important numbers to think about are, so as we said, sales projections and assumptions, cash flow projections, could depend if you have receivables, your payroll, your HR, the people that you hire. CAC LTV is your marketing spend and your ROI on that. There's ask and use of funds that we'll get into. Then there is investment details. That's the stuff of term sheets. So example of exactly what you deal with your investors. And then there is also demographics, public data, internal data, market sizing, which is something we're not going to get into today. So these are all your important numbers, foundational numbers in a pitch deck. And that covers part 2, thinking about your operational financial model. Let's talk about some other items that are important in pitch decks. So those will be team, traction, and sales and marketing plan. So a pitch deck, when you go to your investors, you tell them that you're going to create an exciting business around an interesting value proposition. So you would want to demonstrate capability. You would want to show that it's a reality. So how many years away from reality is this? Is this just a dream, or it's a reality, something that exists, something that's been tested, something that's been executed? And you want to show commitment to growth. So let's take a look at that. So the team is who is making the promise, and do I trust them? Where did they come from, and can they deliver? Okay, so you would if you would have a car business, you would want to bring in people that maybe people who know about cars, but also people who know how to set up a dealership, or people who know about setting up facilities, people who know about repairs, people that know sales managers, things like that. So back to the example of AMI Magazine. If AMI Magazine were to have a slide about its team, right? So Rebbe Frankfurter is pretty famous. He's a great interviewer and a good writer and knowledgeable. But in a pitch deck, you wouldn't just talk about Rebbe Frankfurter. You would talk about the rest of the team who will look after the sales and marketing and operations and the financials of the business and everything else. So when you think about your team and the founders and the co-founders, don't just go with somebody who's passionate about the value proposition, but you would want to talk about the people who know about the business and about the technologies and about different. So not only the technology, right? You wouldn't just put that out. You would want to talk about the people who will support the founder, right? So for example, you'll have your HR coordinator if you're going to build a company. You're going to have sales and marketing specialists. You're going to bring in a CFO, for example, right? So you would want to show a team that the investors would believe and trust and have confidence that they're going to deliver around this whole system that you're building. Then there is something called traction, right? Which is a history of success, or like we just discussed, it demonstrates that this is a reality. So we had a client that raised a lot of money very easily. They only had 3 customers for their software. And we had another client that raised a huge amount of money, but they only had 85 customers. Because, and the important point is that they already had a sale, right? That software that they had, they showed that 3 customers wanted it. That metal thing that they manufactured, they were able to show that 85 customers wanted it, okay? If you already made a sale, it means it's not a dream, okay? It's a huge difference between if you're before your first sale or after your first sale, because that means that this whole system you created is already a reality, and you have a customer for your product. We're going to come back to the slide in a minute, but this is an important quote from a successful business person that might discuss this concept. And he said, he said that the investor may believe, if you already have one sale, the investor may believe that they will come and they will fix your business. They'll get involved. They can see your business. They believe that they can make it successful. Even if you're losing money right now, if you have one customer. All right, so back to this slide. There's other ways of showing that this is a reality, that you have traction, that you have success. So if you're integrated, so if your software is integrated with a couple of important systems in your industry, whether it's retail or healthcare, if all the equipment is set up, if you have a plant with all the equipment and everything is there already and it's ready to go, so you need that, you figured that out already. If you have licenses, if you have other access, that's important. That's also traction. And finally, is sales and marketing is your commitment to growing. How are you going to grow this? Are you going to go to trade shows? Are you going to hire salespeople? Will you offer commissions? Will you have PPC, online advertising, ad campaigns, launch campaigns, guerrilla marketing? Whatever you're going to do is your customer acquisition and your scaling is very important also. So that's your commitment to growing the business. This is the actual photo of an image I sent to a billionaire friend of mine to get an appointment with the founder we work with. So let's take a look at these facts, right? So it was a B2B SaaS. They had 3 customers onboarded in the target market, like we discussed. They had 3 customers, 3 paying customers. They had 4 more coming. They were integrated in their target market, right? Which was hard to do. They had a clear target market, which is the customer segment. They knew exactly who they were going after. And they had interesting ideas for the next phases of the business and how to grow that. Which brings us to ask and use of funds, which is the amount you're going to raise and what you're going to do with the funds. The general idea is to raise enough to accomplish what you promised to accomplish, and not to raise less than that. Okay, so sometimes people will try to raise $150,000, $200,000 in a small scale, or only 2 million, or only 5 million, only 10 million, when they need a lot more than that, because it's sometimes hard to approach investors. It's sometimes hard to get the commitment that you need. But in that case, you might want to shrink what you promised to accomplish, but don't promise to accomplish a lot and raise only a little. Oftentimes, more often than not, when we work with founders, we go through their projected growth. We go through their activities that they're planning, their commitment to growing the business, and we more often than not, we raise the amount because to help them accomplish what they promised to accomplish. So, which ties into use of funds. You tell the investors what you're going to do with the money. You're not going to put it in your pocket. What are you going to do with the money? So you'll buy inventory. You need to buy inventory. So very often people go for loans or lines of credit to buy inventory. You'll purchase equipment or facilities. You'll hire people, engineers, salespeople, just regular staff, secretaries, and whoever to do the work, right? Sales and marketing to grow the business, and which will bring you customer acquisition and scaling. So all your marketing activities. Here is an example, a live example from a pitch deck, which has the administrative costs. You have rent, insurance, bookkeeping, accounting, legal. This business is going to pay for a business coach. This business is going to have PR and media, print advertising. They're going to have systems, CRM, website hostings. They're going to have travel expenses, which are necessary for the business. So don't just say between 200,000 and $1 million, but find your costs, estimate your costs, bring an assumption, and that is your ask and your use of funds. So to sum up, as it says here now that we're all a lot smarter. Think about the business that your idea lives in, right? Don't just think about this exciting part that motivated you as a founder to found the business or just the idea, but think about the ecosystem that you're building around your value proposition, around your product or service. Then, as you think about that business model, you're going to develop its facts and figures. If things, it's the language of numbers, you're going to be able to put it in Excel. This is how much your customers, your segments, various channels, things are related on that side. Your activities are also going to have metrics. Your partners, the costs related to your partners, and your activities and the costs related to those, which brings you your costs and your revenues. Then think about the promise. Who's making the promise? It's a qualified team with experience, with capability, with pedigree. Then traction is where you demonstrate that your idea is a reality, that you're halfway there. You figured out a lot of things. You already had a sale. You're integrated. You have access. You have licenses. You have equipment, things like that. And your commitment to growing the business, your sales and marketing plan. And then the ask and use of funds, which if you understand your business model, you start to get a very good idea of what your activities and your resources are going to cost, how much of them you'll need every year. And that's is ask and use of funds, how much you're raising and what you're going to do with the money to accomplish what you set out to accomplish with your business. About Kavana, we create business presentations for small to medium-sized businesses. We specialize in investor pitch decks, business plans, bank letters, and financial models. And right now, we help people gain access to around $200 million in capital. I'm active on LinkedIn, and our website is kavanaservices.com. So that's a wrap. And thank you all for tuning in, and I'll be happy to take some questions.
Yeah, sure. By the way, first of all, thank you. This was very professional and very beautiful. I'm just curious, is there any like a sample deck that you could show people, just sort of like these parts that you mentioned? Is there a way of like bringing it to life? Or that's the one way. And the other way is also maybe like if there's any type of template you recommend people use that they could punch things into.
Sure. I think that there is a lot of tools available online, and I have to think about them. But if you Google it, you'll find it. There are a lot of pitch deck templates online, and once you think properly about around your so now if you go into if somebody's totally new to this and they're going to Google pitch decks, you can find a pitch deck for Uber, you can find a pitch deck for YouTube, and you're going to understand it. You're going to make heads and tails of it, right? That's number one. So you can just go Google famous tech startup or famous business pitch decks, and you'll be able to understand, you'll be able to apply it. And also there are a lot of tools online for creating pitch decks. And the key is to know, like I said previously, you can use even AI, but the trick is to begin with an understanding of your business model, and then you can use all these tools. I see all the time people send us business plans or decks for review, and sometimes they're really, really good and they barely need our help, and that's because they thought about their business model, they thought about the parts of their business, and then they used online tools, and then they are very successful.
Got it. Okay, we'll move to the Q&A segment now. What you could actually do is if you have a question, if you don't mind, raise your hand and I'll call on you, and then you just unmute yourself and you'll ask the question to Joel or Yoel. So I'm monitoring the chat right now. If anyone wants to ask a question, please raise your hand. Shoal Nemetsov has raised his hand. Go ahead, unmute yourself, please. And
So, a very interesting presentation and very thorough. What is a typical process of how you work with the founder? Obviously, every founder is going to be at a different stage, and they're going to have different clarity on different parts of their business. But what's a typical process, and how long does such a process take? How does it work?
That's a good question. So not here to do a sales pitch, but the way anybody should do it would be to help to go through such a framework to help a founder understand their product or service, and then to develop all these parts, right? To develop all these parts and then to give them time to come up with all their revenue streams, all their ideas that they may have, right? It's because every founder will think differently about their business system, about the activities that they will or will not want to do, or the customer segments that they will or will not want to engage with, or the channels that will or will not work for them, or the partners that will or will not work for them, right? So some people will not want to work in a regulated industry, or some people will not want to have, different HR resources, right? So the process would be for anybody that wants to help you create a pitch deck, they would want to work with you to develop your business system. And once you develop your business system, you would want to develop, your numbers, right? All the important numbers that we discussed, which are, so I'll go back to that slide for a second. So you would want to bring to your investors your sales projections and assumptions, cash flows, HR, your marketing spend, your asking use of funds, so to understand that, and then also to develop your team, your traction, all these typical slides that you can look up. So somebody would work with you on that, and it depends how prepared you are. And such a process should usually take, the fastest we ever did a pitch deck for in the medical industry was 1 week. 1 week start to finish, design, writing, strategy, and all these numbers developed because the founders were ready, the business model was figured out, the revenue streams were figured out, customer segments were figured out. So it depends how much thinking, if you want to go back and forth, if you want to discover with partners, and a lot of things change, your numbers will change. So for example, you may discover that your raise will be too high, or that something is too large or too small of opportunity for you. So this is, so it is a little bit of a process, and it depends, but I hope this answer helps a little bit.
Yeah, definitely helps. Can I ask another question?
Go ahead.
So, what about a business that doesn't have real traction, and it's more of a founder's dream? What would you say to such a founder? Would you take them through a process, or would you suggest they go back out and try to gain some traction?
Right. So a lot of businesses, I think that's called bootstrapping, but I'm not sure. So a lot of businesses work hard to create some realities, to create something out there in the world to prove their concept, right? So they try to have one customer without an investor, or they try to figure out some of their equipment, some of their integrations. You meet founders all the time at networking events, and they have this amazing software for something to do with pets, but they figured out integrations with various local guides or Instagram or whatever. They figured out how to attract customers, so they figured out certain certain integrations, or they got access or licenses or some things to show that it's a reality. So attraction comes in a lot of flavors, but or they have some equipment or something. If you have zero traction, if it's just a dream, you didn't start anything, it could be that you can find an investor, but maybe the founders should ask themselves if they can produce something, if they can start making this a reality before they go to an investor in any way, shape, or form. And if they can't, they can still try, but it's any smart investor will want to see if you already tested it, if you already created something.
That's very interesting. I haven't heard that very clearly from anyone else, that real traction is almost a crucial component.
Right. Thank you.
Okay. That was a great conversation. Is there anyone else? Does anyone else have any questions for Joel?
Rabbi Werdy, how
Yes.
about another question? How about another question from you?
Another question from me. So you want me to ask a question?
Yes, let's hear a question. What was something we could explain just a little bit better?
Now you caught me off guard over here. I mean, again, my original question was just something that people could refer to take this, what they learned from it and apply it.
Yeah,
But,
I think it's very, you see these articles all the time. So back to your question, I really enjoyed your question. If you go back to if you go to look up, for example, Uber's pitch deck or somebody else's pitch deck, any famous tech brand that excites you, that raised a lot of money for investors. Anything that, you know, if you're in healthcare, you know all about all these different apps and AI, and you look at those pitch decks, and you're going to find areas that they focused on in their pitch deck. So some of them had an amazing team. Some of them had, so they brought founders, which the investors didn't want to let go of that team. Or they had traction, which they proved their idea, or they had amazing access to something, to a segment, or they had access to software, they had access to data, which nobody else had. And for example, we had a founder recently that showed they had rare access in certain areas of healthcare, certain data that's hard to get, right? So that was their hook. Or if somebody comes up with somebody has a very simple idea, but they have a great sales and marketing plan. So the commitment to growth and their plan is very, very well thought out, very exciting. Or think about any other angle of it. If the numbers really make sense, right? And if you're very clear on any area of it, on your customer channels and your customer segments, and in general, if you thought about the ecosystem, that's something that's very exciting to investors. And once you figure that out, it's pretty easy to do a pitch deck. Once you figure out the basic elements, and it's not about you started the webinar talking about how to approach investors, but really it's a lot of the homework that you can do before you go to investors that will make all the difference.
okay, and then this really wasn't part of today's class, but do you have any people, let's say they make a nice deck, but now they got to get appointments with investors. What's your tips to how do you get investors to pay attention to you, to even give you the appointment?
So you go out there, you have your elevator pitch, right? And your elevator pitch needs to be about the business, you need to make sense, right? So if you're going to tell them about some exciting technology and you're going to talk about the value proposition, that's not, they may tune you out because they hear that all the time, right? So you're gonna have a new car, and a lot of people do that. But if you think, wait, I have this figured out, you talk the language of the business model, and you explain the system that you're building. And so that's something exciting that their ears might perk up if you have an amazing team that's capable of delivering the promise, right? Or if you have traction, that brings you attention. Like I showed the example of that email which I sent, and it had just a couple of lines, but those were very important to that billionaire investor to listen to that founder. So how to find investors is one question, and you should go out there and find and you tell the high net individuals around you, your lawyer, your accountant, those are usually sometimes high net worth individuals, and you let people know, but it's important that you have your pitch and that your pitch is about business. And then people hear about that and they think, hey, I have a couple $100,000 looking to invest in something, and they'll find you, and you'll attract your investment that way.
Got it. Okay. Fine. Very good. Shakaya, thank you very much. Thank you everybody for joining us. This presentation was recorded, and we will, God willing, email you a link in the next couple of days for your review. As always, CHYE is here to be a support and a business resource. If any of you have any particular questions about your business, always feel free to reach out to us at any time, info@chye.info. And have a wonderful rest of your summer and continued success in your business. Kol Tuv.